Hello class, how you doing today? Here's the scoop. We're going to be doing velocity banking and infinite banking, using savings, leveraging debt, paying off debt, getting to the goals that we want to get to. On the board, I have a lifetime client of mine, joined recently. What we're going to do today is lay out the 2019 game plan for her. So this video is strictly going to focus on 2019. We've had a couple conversations. I've been working with this wonderful lady since the beginning of this year, and she became a lifetime client recently. So she's been taking a lot of action, getting a lot of results, increasing her cash flow, wiping out bad debt, obtaining a debt tool. She's got savings. Okay, so there's a couple of things that are coming up that we went over that I want to document to give her some ideas, gives me some ideas, and then once we get up to the things that we have coming up, we can always review and say, okay, here's what we were thinking 6 months back, and then now that the actual plan is ready to take action, we're able to, decide which route we want to go. Displaying the numbers here, we've got income of $10,000, expenses, total debt, which is really just 2 big mortgages that we have. Here's our cash flow up to date. We're finishing out the month of May as I record this video. We've got a line of credit for $25,000, 12%. We've got this savings sitting, right? We've got money sitting, $38,000. And we've got 3 distinct things coming up that are that need to be taken care of. For example, we've got in June, we got to take care of some repairs on a property. It's going to cost us about $15,000. Okay. What we were talking about was, okay, should we use the savings to pay these things that are outside of debt, right? Because this expense right here is not necessarily a debt. It's something that we have to pay for that happens to be a big expense. Same thing with October. We'll have $13,000 in taxes. That's to be another expense. It's not a monthly expense, but it's like an annual thing. So how should we handle that? My first thought was, well, if we keep the same rules with velocity banking, as of May, her line of credit will zero out. Okay, so we're going into this 0 balance. Coming into June, we're gonna go ahead and take a chunk from the line of credit, right, and pay that expense. At the same time, we're gonna use this $38K and we're gonna go ahead and establish a policy, okay, which is something that I drew out right here, and I've got some details that I'm gonna get to in a minute. For right now, our focus is, okay, got the line of credit, we're gonna take money out of the line of credit, make that chunk, do the repairs on the home that we need to do, and then we're gonna do velocity banking on that, where, dump income in, take expenses out, right? Now, what we wanna do is take this money, establish a policy ahead of time. We're gonna give ourselves, I'm giving her about a 2 to 3 month window to really get the education. I want to teach her everything I can possibly, cram into that time period. I want to make sure she's fully aware of what's going on, what she's doing, how she's going to do it, right? So when we take that $30K, we're going to establish a policy. The criteria that I laid out for the policy is we're going to do roughly 10 to 15 year funding period, give or take. We'll see. She can go lower, she can go higher, it's her preference. I want her cost of insurance to be no more than $6K. So it has to be less than $6,000 for this to work properly, right? We're a little bit older, so our first thing that we have to do is qualify for life insurance. I have a lot of clients that are in their 50s and 60s that are just now wanting to establish the policy because they see how valuable it is when we actually use it for other reasons outside of just paying for a death benefit. So, we're a little late to the game, but that's okay. We can still get our wins. We can still get our victories. So nonetheless, I want the premium to be less than $6,000. Her mech should be somewhere around $40,000 to $50,000, which is a safe number based on the current numbers. Okay, so I expect her to increase her income, increase cash flow, but based on current numbers, right? You take that cash flow, times it by 12. Here's a number, okay? If we were to take 66% of the line of credit, right? That's 16,500 from here. And if I had the ability to chunk 3 times like I normally would to pay off debt, my number is 49,500. And to top it off, I've got this savings of 38K. So that brought me to say, okay, to start it off, since I'm using all my savings, I'm not going to be putting in more money. Why am I not putting in more money? Because we're using the line of credit to take care of these different expenses that are coming up. So I don't want to over leverage myself. I simply want to move this money into a asset that will help me do velocity banking later on, right? And for right now, we're leveraging the line of credit. So that brought me to 40 to 50K mech. My goal is to have her policy break even between years 4 and 7, right? So no matter how much money I'm putting in, the money should break even by between years 4 and 7. If it goes past year 7, then that means I didn't design the policy right. So that means we have to evaluate. That's why we're gonna look at the illustrations and make sure that, okay, this makes sense. If my cost is X and I put in this amount, add the dividends and the leverage doing velocity banking, that's what we want to bring ourselves to. So those are just some of the things that I was just rolling around in my head as I think this out. And then the system is, I've got my income here on the right, I've got my line of credit. My line of credit after year 1 of funding the policy, because if my mech is 40 to 50,000, well, I basically pretty much hit that, right, the first year. So I don't really have to put in more money, right? For 2019, that's not the goal. We're just simply trying to move this so that we can leverage it later. And I'm going to explain how we leverage it in a few minutes here. So based on current cash flow, current income, current debt tool, over the next 2 months, give or take, we'll establish that policy, simultaneously doing velocity banking on these repairs, right? So however long it takes me to zero this out for June, I have a window period. I've got some space to work with. So from June to October, I'm doing velocity banking. Now, I'm betting, especially with cash flow and income, that we'll totally wipe out this chunk way before October. We really should. We shouldn't have that issue. So October 1st is the next chunk that we have to worry about. So while we're doing velocity banking on here, as soon as we zero this out, we'll have a bit of a period here, and we're just preparing ourselves to pay this chunk in October. So let's say, for example, we zero out the line of credit by August or September, right? Some people have questions on, okay, what happens when I'm doing velocity banking and I get done early? Should I immediately go into the next thing, tackling the next debt, right? That would be the answer, yes. But what if you've got an upcoming expense that's outside of your average monthly expenses? So if you've got a big tuition bill coming up for the kids, or you got a big tax expense coming up of some sort, we would put our chunking towards debts on hold, and then we would chunk towards that specific debt or that specific expense, that specific expense that we want to wipe out. We can either option one, take $13K from the line of credit, keep doing velocity banking, or we can pull from the policy, right? In my mind, I like the idea of pulling from the policy and then using the line of credit to pay back the policy and lose none of my cash flow. All right. Reason being is because right after this 13K chunk, we have to make another chunk towards our American Express credit card that's going to have an 11,000 balance on it. Right now it's at 0%. So she had an expense prior to May that she ran up the credit card about $12,000. She's paying the minimum payment right now, 0%. It expires in December. So notice how this 11, this 13, this 15, you can see how it's putting us out of whack in terms of paying off debt, right? It's kind of delaying us. So in order to not have this delay us, if we establish the policy, it can certainly buy us time and create even more leverage by maximizing our savings, right? So we're gonna put that savings in there, let it sit, rather than pull from the line of credit to pay taxes and to pay this Amex bill. We can take out a policy loan in October, boom, pay it, right? Take the line of credit, put a chunk payment onto the policy, replenish the whole thing. Then we take out another policy loan in December of $11,000, pays off the Amex bill, and now I only have to worry about doing velocity banking on the $13,000 over here on the line of credit. And if that's the case, I'll get done faster than the amount of time it took me to zero out the 15. Would you agree? Of course. Okay. So that is the 2019 game plan. And then going into 2020, right, is when we would focus our attention on one of her mortgages that we want to wipe out. It's the Chase mortgage. And rather than using the line of credit to chunk at the Chase, what we can do is chunk into the policy first, because we're stepping into a new year. So that means I'll be able to put in more money. I've already got a nice chunk of money in there. So now I'm going to put in more, right? So I'm going to have my chunks from my line of credit go to my policy, which I then borrow out to then make a chunk to start wiping out some debts. And when we get to that point, I'll decide what the chunk amount is. But for right now, what her main focus should be is really what I laid out here, so we know what to do with this. So just to recap, so my friend understands and that we're both clear, we're both on the same page. And the benefit of, being in the Lifetime program is I make videos for you with your numbers on the board. And then if something doesn't make sense, we just schedule a time to talk, unlimited consultations for as long as you and I live, okay? That's what it is to be a part of my Lifetime program, is we get to run your numbers day in and day out. If something changes, we run the numbers again. If income goes up, we run the numbers again, right? Emergencies go down, we run the numbers. Run the numbers, run the numbers, run the numbers, until you become experts at it for yourself, right? To the point where you don't need me anymore. You're just recapping, reviewing, sharing ideas, bouncing them off of me. And I'm like, yeah, do that. Great. Okay, boom, boom, boom. Awesome. That's what that's like my main goal, trying to get my clients to that point, get my family members to, get to that point where it's like, okay, we're just putting these plans together and we're creating wealth in the process. We're wiping out all this bad debt and shifting that debt to assets that we can leverage, that we can make money off of. So, recap, line of credit, make the 15K chunk, pay June, do velocity banking. We zero it out before October, right? In the meantime, we establish the policy within 2 to 3 months using our savings. Keep it there, don't do anything. Up until October, we borrow out $13K to pay October expense. And then in December, we take money out again to pay the Amex balance, okay? The line of credit will now start to fund the policy, which we would then do velocity banking on the debt using the policy. The line of credit pays the policy. In terms of your expenses, they're going to be doing this. Same thing, line of credit. Income goes in here, expenses out, right? But the chunk went to the policy first. That's the only thing we changed. So rather than the line of credit chunking at the debt, we're throwing the chunk in the policy, which then the policy borrows out to pay the debt, to pay our mortgage off and every debt after that, okay? And in the process of doing that, as I'm taking money out, my money is also growing, tax-free, interest, no matter what, and I never lose the money. So even when I have the money out, right? So if I got 40K in there, I take out 20, I do my chunk. The insurance company's still gonna credit me on all my money. I'll be fine, right? And the amount of time that it takes me to pay back the 20 is gonna be so fast that the speed at which we go and then coming back to the cost here is gonna be negligible compared to how we're using the money, right? So we want to make sure that our premium is no higher than this because I don't want it to be a drag, right? I don't want the premium cost to be a drag on our monies, right? I just want it to be just enough so that it can create this enough mech space for me to put in extra money at leisure throughout the year and grow my cash, right? And then here's just a little strategy that I wrote out in terms of throwing chunks at the policy. She can basically chunk 3 times a year, and that would equal up to the 50K just about, you know, and go from there. And then if her income goes up, That's amazing. That's part of, you know, also the 10X part. And she's going to acquire more properties, and we're going to do more damage. So she's not going to have all her money going there, right? That's just a good portion of it going here. And then we're going to keep building this cash flow, and we're just going to keep going faster and faster, right? So I hope this helps from my friend here. It's been really exciting working with you, and I can't wait for you to put this all into action. So it's good that we're planning it out now. So if anything changes, we're good. We understand what to do, right? In terms of when things change, we know to stick to the certain plan because that is like our fail-proof system as we finish out the year of 2019 and then know exactly what we're going to be doing going into 2020. All right. My name is Denzel. I hope you guys enjoyed this video. Subscribe if you're new. Like this video. Check out my website. Check out my services in terms of helping you, providing you with coaching and consulting on your velocity banking scenario, making sure that we're maximizing your dollars to pay off debt rapidly and hit the goals that you want to hit financially and establish that kingdom, my friend. All right, so you have a blessed day. Bye now.